Good afternoon and welcome to our weekly livestock market update. I'm Brownfield news anchor reporter Megan Grebner. With us this week is Scott Brown with the University of Missouri. Good afternoon, Scott.
Good afternoon, Megan.
Overall, it's been a pretty quiet week on the livestock side of things, but last week we got to start off with some good news for a change, and I think we get to continue that theme, I will say, this week as well.
Yeah, absolutely. I think it has been relatively quiet, which is nice for a change because we've had a lot of news, most of it not being very helpful for producers, and so being a little quieter has been good. We are higher in terms of prices this week. When you look at futures markets, we have across the board cattle higher. We were much higher yesterday in terms of cattle futures. We've slid a little bit today, but all in all, it's been another good week. Lean hog futures moved up substantially as we look through the week. We got another $4 or $5 a hundred back on lean hog futures, so that's very good news relative to what we've been doing for several weeks in a row, talking about lower prices. So it is good news.
With us seeing another week of higher prices and the first week since in many that we've seen both beef and cattle end higher, does that get us to start thinking, and maybe does that bring some risk management ideas into the forefront of our minds to prepare and preserve some of those margins?
Megan, I think it does. You allude to the fact. So when you look at wholesale values, cutout values for beef and pork, this is the first time since really the 4th of July we've seen both of those up for the week. So it's been a long time with both markets moving in the right direction. And I think it is important. I don't think we want to start down this road that we're going to be back to record cattle or hog prices anytime soon. Supplies will remain plentiful as we end 2016 and go into 2017. And yet I think we have an opportunity for cattle prices to continue to gain some strength as we get out of the latter part of this year. Hogs, maybe that's a little different case. But on the cattle front, it may be time for folks to start thinking, if we get another $5 or we get another $10 a hundred on cattle prices, is that the time to do some risk management? I can be optimistic as we finish 2016. However, I don't want to be overly optimistic, and taking advantage of those opportunities might be the difference between long-term staying in business and otherwise not. So I remind us all the time, given that we're increasing supplies of beef and pork and chicken, there's probably more downside risk than upside potential in these markets. So we should be planning accordingly.
I would assume, as we've seen, soybeans break $10 this week that's not something we're talking about on a regular basis on that side of things, or on the input side of things, and some back and forth with the corn market. Producers got to be thinking about locking in some inputs to maximize their return on investment.
Yeah, absolutely. I think when you look at where we've been on corn prices, up another roughly a dime in futures this week on corn. And as you said, soybeans getting above 10. All those things tell you we're getting a little bit of strength in those markets. I would say the same thing to those producers of corn and soybeans as well. With record supplies, there's more downside risks than upside potential. But from a livestock perspective, I do think it's important to remind us that locking in either just the livestock side or just the feed side, there's some risk of if you lock in just livestock prices and feed prices move opposite of what you want, you leave yourself open for what's not a very good situation. So thinking about the entire package of whether it's cattle or hog prices and feed cost is important. And can I protect that margin when we realize that feed's probably 60-70% of total cost of production for many of these categories? Locking in both sides of that profit equation may prove useful, especially as we worry about what happens to the South American crop as we look ahead, and as we worry about how we come out of 2016 with still what's going to be increases in beef and pork production in 2017.
And there's that pesky La Nina that's hanging around as well, that I would assume at least the crop producers are thinking about this year and next year.
Yeah, absolutely. So short crops gets us higher crop prices, no question about it. And how long we stay with those is less clear with higher stocks today, but you know the direction. And the last thing we want to do is feed $5 corn at a dollar fed cattle. That does not work.
No, I would agree that it does not. When we look at these prices, Scott, how does this is there a seasonal effect that goes into where the prices end up as we look at the going into, let's say, Thanksgiving and the holiday season?
Absolutely. You know, we're starting to look at some of the demand side as we enter the holiday season. I think when you look at cattle prices, a normal seasonal pattern, which maybe we haven't seen a normal seasonal pattern in a few years, but looking roughly 2007 to 2013, we'd expect some rise in at least fed cattle prices. We'll see how big we get placements here as we end the year, but fed cattle should be rising, and I think that's hard for folks to get their arms around when we've done nothing but be negative for several weeks running. Now, unfortunately, on the pork side, we know we have heavy runs of hogs that come because of the seasonality on the supply side of pork. That tends to outweigh any kind of holiday demand strength that we get. So it's not surprising that we talk about lower hog prices as we go through November and December. And again, I think we will continue to caution folks that we'll get really close on capacity. And so those seasonal issues will continue to exist, but let's really hope we get some seasonal bounce continuing in cattle markets.
I guess my next question, Scott, is when we look at this beef market that's taken a pretty big hit this year, are we nearing the bottom? Or are we close to that bottom where we can start to crawl our way back out?
I sure wish I would with certainty could answer yes to that question for producers out there, but I do think there's a lot of things that have been moving in a way that gives us some hope that the bottom's a lot closer than it was. Number one, you know, we haven't been to these prices for a period of time, and I think how much we've seen feeder cattle prices decline in 2016 has certainly slowed down the growth in beef cow inventory relative to what we might see had we had higher prices. So maybe supplies don't grow quite as quickly once we get, especially further into 2018. We'll see what we get in terms of cow counts here at the beginning of 2017. So I think that's helpful that there's some bottom out there. You know, if I'm a pork producer, I sure want that new capacity to come on board. I think we're going to continue to grow hog inventories and hog slaughter, and 2017 could look a lot better because packer margins have looked pretty good in 2016 given just the runs of hogs that we have. So I do think we're starting to see some signs that we could get some bounce. Now, again, I will say, don't expect $1.50 fed cattle anytime soon. I don't think it's that kind of bounce, but a lot of negatives I think maybe help us. And again, we're passing lower prices to consumers. More consumption of beef and pork, I think, will result as we continue to pass lower prices along.
I will say, being at the grocery store this past weekend, as we've been looking at things, the prices have been incredible for some cuts of beef that you wouldn't necessarily think as being a reasonable purchase.
Yeah, absolutely. And I look ahead and I go, I don't think that's really going to change. And maybe in fact, we're going to see some opportunities for restaurants that maybe have been slow to change menus, that now with some cheaper, higher quality beef, let's say, they may change what they feature on that menu as you look ahead. So we may start to see some of that longer term switching occur, as well as what we've already seen at the grocery store that could be helpful for all the meat proteins as we look ahead.
Scott, one last question. We talk a lot about those big runs of pork and having this glut of pork supply in the U.S. How does that impact the global marketplace and what happens there?
Yeah, so I think, you know, we should never forget China dominates world pork markets. When you got nearly half of production occurring in China, it's important. So when you look back at 2016, the Chinese were certainly short on pork production as herds had contracted in China. It gave us an opportunity for many countries to try to trade more into China. I think we were certainly hopeful that we would get more of that Chinese market, just given the large increases in pork production we've seen so far in the United States. However, when you look back, it seems like the Europeans have captured much more of that market than we have thus far. And you may say, well, that's bad, but I'll come back to say I think it gave us an opportunity to get into some other markets that the Europeans may have backed away a little bit from as they went into that Chinese market. So getting additional trade into China, I think, is helpful as a whole. It in many ways tended to outweigh what we had going on here in the United States, where we had a much larger supply of pork. As we look ahead in 2017, those export markets, the Chinese, if they decide they want a lot of pork, it's an easy way to get out of what would have been lower prices for us.
Scott, anything else this week?
I think we've covered most of the important things for the week, Megan.
Good to see you as always.
Good to see you as well.
Remember, if you have questions for Scott and myself, you can submit those to us online. Go to brownfieldagnews.com. And while you're there, you can also subscribe to have our weekly livestock market update delivered to your inbox every Saturday morning. Have a great weekend. I'm Megan Grebner on Brownfield.